Day, and this was the final session for the week, as tomorrow is a holiday on account of Republic Day. It was also the monthly FNO expiry for the January series. Now both headliners opened with minor cuts, and we continue to trend lower through the day, making lower highs and lower lows along the way. Even at one point, the market, I am talking about headliners here, they were down somewhere around 1% or so, and it looked like it was going to be another session of losses for the Indian markets. However, bulls, they made a strong comeback in the last half an hour of trade and pared most intraday losses, as the provisional close was very close to the opening levels as well. Anyhow, at the end of the day, Nifty settled around 0.47% lower, just above the 21,350 mark, and incidentally, it is the close, the 21,352 is very close to the 23.6% retracement level of the entire rally that we saw from October to the most recent record high hit in January. Now that level falls at somewhere around 21,347 mark, and we essentially closed above it. So this perhaps could be a very strong support level for the index, and we had spoken about it this morning as well, and although we did not respect it on a intraday basis, the Nifty did manage to close above it, so that becomes a crucial support moving forward for us. Sensex, on the other hand, fell about 360 points or 0.5%, and ended at 70,700 sort of levels. The broader markets, now they were mixed today. The mid cap 100 reported some losses. It was down about 4.45% in today's trade, but did manage to close above the 47,000 mark. In fact, it closed about 200 points higher from it. The intraday low was below 47,000, so good to see that the index has managed to sustain above that. The small cap index, on the other hand, just like morning, it was the strongest segment of the market between the three indices, the mid cap, the small and the large caps, and that index was up about 0.5%, and it ended above the 15,400 mark. Volatility, India VIX, we were talking about India VIX as well this morning, and that had scaled 15 levels in the morning trade, which historically speaking is higher for our markets. But remember, today was a weekly FNO expiry, so a bit of volatility was expected because of the expiry. But good to see that India VIX has declined about 3.5%, and we not only broke below 15 but also ended below 14 levels on India VIX. Moving on to the sectors, it was a mixed bag, and let's talk about the banking pack first, because that was a segment that has been a laggard for the longest of time. We have been talking about on this show for the past several months how banking sector has been a major drag on the markets as well, and that's how it was turning out today too. Nifty Bank, just about at 2:55 p.m. was down over 1% or so. But a rally in Nifty Bank also led to a rally in Nifty in that last half an hour trade. But the index still settled about 0.5% lower. But good to see some bit of a recovery build in the last half an hour. So perhaps some bit of a short covering also was taking place over there. Apart from the banking pack, the auto, PSU banks, metals, and auto, PSU banks, media, metals ended today's session in the green, whereas your sectors, the performing sectors such as pharma, IT, FMCG ended with cuts of over 1% or so. And let's look at the market breadth, because that has been a point of contention. Pretty much on a daily basis, we have seen the ball shift in favor of bulls or bears, but today bulls were able to, in that last half an hour of trade, bulls were able to pull that market breadth towards in their favor. And as you can see on your screen, around 1,400 shares advanced in today's session, whereas about 1,000 shares declined, and 158 shares made a new 52-week high, and about 15 shares made a new 52-week low. But just as I was walking in, inside the studio, the numbers of JSW Steel were also out, and net profit for the company has improved by about 5 times. We have seen a 5-fold jump in net profit, and that figure stood at around 2,415 crore for the December quarter versus 474 crore in the year ago period. That's a 400% plus jump as far as net profit is concerned, and a big beat because Street had pegged the the figure somewhere around the 1700 to 1800 mark, but we have sufficiently exceeded that. And revenue figure also, it was a single digit surge and slightly below the Street's expectation. Revenue for the quarter stood at around 41,940 crore versus 39,134 crore in the year ago period, which is about a 7.2% jump. EBITDA, earnings before interest, tax, depreciation and amortization, jumped almost 58% from the year ago period. That figure comes in at around 7,180 crore, and in the year ago period it was somewhere around the 4,547 crore mark. Margin improvement was also substantial. In the December quarter, the operating margin stood at 17.1%, and in the year ago period it was about 11.6%. So a 550 basis point or 5.5% improvement as far as the operational margins go. But to understand how the results look and discuss about the market momentum, let's also bring on board our expert, Mr. Ambrish Balega. Mr. Balega, thank you for joining us here on News9. Always a pleasure speaking to you. Please help us understand the numbers. I know they just came out after the market hours. We have seen a five-fold jump. The stock was also paired all the losses. In fact, ended in the green, up about 0.8% or so. What's your initial thoughts on the Q3 print of JSW Steel?
I think the numbers were really good. I mean, although the revenue reported was a bit lower than expectation, but I think on the profit front, I think it was far, far higher. Like you rightly said, the expectation was closer to about 1750 crores, and they've declared 2,400 plus crores. So I think that's extremely positive. And if you look at the other steel companies, like Tata Steel also had extremely good numbers. But then we should remember that there could be some inventory gains, because of which we have seen this sort of numbers. And I think the street is a bit also concerned about the costs going up, from this quarter onwards. So despite these numbers, I don't think you'll see a huge jump in the prices next week, like exactly the way we have seen for Tata Steel. So, I really don't see much of a movement, but per se, the numbers were good.
All right, the numbers of JSW Steel are looking really good. But moving on, the market have been very volatile in the last couple of weeks. What's your directional view of Nifty, and what do you make of this last half an hour recovery that we saw in the markets today?
I think the coincidence continues. The day I'm there on your channel, we see a down day.
Right.
Although we have seen a decent recovery, I think that was because of the F&O closure. I think there was some sort of a short covering. But then looking at earnings, like more or less whatever has come till now, I think there has been slightly more of disappointments because the expectations are anyway high, and I think that will continue. So possibly this market has in fact moved from buy on dips to a sell on a rally market. So I see further correction going ahead. In fact, I was expecting the markets to possibly hold on till the budget and possibly, correct post that. But the way we are going, it's very much possible that the correction has already started. But it may not be a one-way correction. We will see some sort of a upside in between. But overall, if you look at the next month or two, I think we will see weakness.
All right, so a difficult February as well. But can we defend 21,000 on Nifty?
I doubt. Because that's, once we break that, I think the fall will be sharper. I'll not be surprised. I'm just sticking my neck out again. I'll not be surprised if we see levels of closer to 19,500 before the elections.
Wow. And so is a pre-election rally that we have been talking about, is that still on cards, sir?
I don't think there'll be a pre-election rally because the best of expectations are already there. You ask anyone on the street, I think you'll get mostly the same answer as to who's coming back and with what sort of a majority. So when all the positive news is already factored in, I don't think there'll be a major boost post that. And again, I would like to say that whatever said and done, whatever the expectations are, elections means some amount of uncertainty, and the markets do not like uncertainty. So we'll see volatility, we'll see a correction before the elections.
All right, so pre-election rally does not look likely as far as Amrish Baliga sir's view is concerned. But in a correction or a choppy market like this, what will be some of the sectors that perhaps one could add to their portfolios?
No, in fact, I mean, those who have possibly missed out on this rally, I think, I mean, this time could be a good time for them to get back or invest fresh. And I would surely look at, I mean, the auto sector, FMCG, pharma, and at the same time, my favorite sector, which I've been talking of for quite a while, specialty chemicals, which again, we have seen some correction. I think one should lap up all these sectors. And again, I'm not saying defense, I'm not saying railways, because both these sectors have become just a bit too expensive. They would be more of trading plays at these levels, or even on a correction of of about 15 to 20%, they will still remain those trading plays. But for investment, these are the sectors I've talked about.
All right. And there's a lot of chatter about this SEBI's additional disclosure norms for foreign institutional investors that are set to kick in from February 1. Is that one of the reasons why we are seeing this sort of a sell-off in the market? Because I was looking at the data, that's also hinting towards an exodus in the the second half of January at least, where your foreign institutional investors have pulled out somewhere close to 35,000 crore in just 6 sessions. Do you think that's a factor that's playing out?
No, that's one of the factors, no doubt, because there are a number of institutions, FIs, which would not like to disclose, and because of which we could see that sell-off continuing. So, I mean, although we say that I mean, the retail funds are there, they would absorb it, but then there would be a gap between the amount being sold and the volumes which are being sold by the FIs and the buying by retail. And we should always remember that most of the retail investors are new. So, in case we see a major correction, I don't think, I mean, they would have the same confidence like earlier to buy at lower levels. In fact, they won't know what to do. And that's when we'll see panic among the retail investors. So, one has to be a bit careful.
All right, and do you think that the stocks with high FPI concentration could see a correction, a further correction? Because, beyond February 1, I'm talking about, because as per my understanding, those who fail to comply with the norms will have additional 6 months to reduce their holding, isn't it?
Absolutely. So, I mean, they have those 6 months to reduce the holdings, but then I suppose people may not really wait till then because whenever you're rushing to the exit, I'm talking of these FPIs. I mean, they would prefer to be the first to exit. So, I think there'll be a sort of a stampede as far as I mean this space is concerned. So, I don't think they'll wait till possibly July, August. They may finish off whatever they need to do by the end of February.
All right, and Mr. Baliga, please stay on with us as we'll be taking a short break now, but we have lots to discuss with you on the other side.
Inside our jails and is still very obviously and openly running and possibly the largest organized criminal operation in the country.
स्टूडेंट ऑर्गेनाइजेशन ऑफ पंजाब यूनिवर्सिटी में सोपू का एक्टिंग प्रेसिडेंट टाइप भी रहा है.
He was a troublemaker, getting into fights with people, not coming to the class.
As on date, it appears that Lawrence gang is the most important, the prominent gang. Gangs here in Punjab, they are intimidated.
Today he is India's most dangerous gangster, and India's presence are apparently no bar to how Bishnoi runs India's largest criminal empire.
News is now content. Just stream it. Download the world's first news OTT, News9 Plus, ahead of the curve.
Welcome back. You're watching Last Tick here on News9. And Mr. Baliga, coming back to you, what are you making of this entire Sony saga that has been going on? Is there a possibility of perhaps a hostile takeover either from a Sony or any other potential suitor?
No, I mean, as of now, it doesn't seem to be a hostile takeover. I think it will be an arranged takeover. And looking at the sort of tweets which came on, I mean, like 2 or 3 days back, I think it's decently clear as to, which group may be interested in taking over Z. I mean, they just took over another channel recently. So I think, something seems to have been arranged. So the way I see the Z stock is this could be an opportunity because of the major sell-off which we saw after Sony pulled out. Clearly, I mean, Z in the next 1 year will not remain the way it is. It would be taken over by some group or the other.
And I mean, if you have any speculative names, if you would want to throw some names in the hat apart from Sony, what could be the potential partners?
I've already given enough hints, but anyway, if you want the name, I think the name which is going around is the Adani Group, which took over NDTV recently.
Right.
They have decent interest in the media space. I think they would be the major suitors for Z.
All right. And so moving on, India recently overtook Hong Kong to become the 4th largest stock market in the world. But it's not like that. It's just us who has done well. But the Chinese and the markets in Hong Kong, they have been underperforming since hitting that peak back in 2021. So from a valuation standpoint and from a foreign institutional investor standpoint, where is the value add? Is China looking cheaper? China and Hong Kong looking cheaper than us at this point?
I mean, surely they are looking cheaper than us. But then once the momentum starts out there, I think that's going to be an issue as far as the Indian markets are concerned because, these institutional investors, especially the FIIs, I mean, clearly they look at the markets which are performing relatively better. I mean, last year they got interested in India a bit late because once we started performing, then the sort of attention shifted to India. So similarly, I mean, you have the Japanese market doing extremely well now after more than 30 years. And now if we have the Chinese markets, Hang Seng, doing, starting to recover, I suppose part of the institutional money will surely flow in there. And along with that, if we see that Indian markets are flat or negative, and that will be more reason for them to pull out.
All right, and there's a $2 trillion gap between us and Japan, who's number 3. When do we get there? When do we take over the 3rd spot?
Look, we will surely take over the 3rd spot. I mean, it's a question when. I suppose that should happen over the next possibly 3 to 4 years. But I think that's very much possible because if you go back about 8 to 10 years, when people are talking of 1 lakh for sensex, I mean, like the question was, people expected that to happen by 2017-18. It didn't, but now it should happen possibly over the next 3 years. So, a growing country like India, you'll always see the indices going up. I mean, they'll never, go down to the levels which we had seen about 10 years back. It continuously move up. But the question is the time taken.
All right. And sir, since we are discussing global markets as well, a lot of people ask me, since I cover stock markets, that how do we take exposure into global markets? So what, in your opinion, would be the best way to take exposure? Should we go for an ETF or should the approach be more stock specific when investing in global markets?
No, again, the question is how much of time are you able to put to understand the global markets, especially the stocks which you want to buy. So if you're not able to do that, then it's best to go with the ETFs. And that's what I would suggest to most of the people, because it doesn't make sense buying into stocks without really studying them well.
All right. And which particular market, if you could name one, looks attractive apart from India in the emerging market basket or the global basket as well?
No, I've not looked at the Asian markets very closely, so I really will not be able to comment on that. But as far as the ETFs are concerned, I would surely look at the US markets. I think that's where I would invest.
All right. And sir, talking about global markets, former US President Mr. Donald Trump recently won the New Hampshire primary, and that has helped him tighten his grip on the Republican presidential nomination and perhaps has bolstered the likelihood of a rematch later with the current president, Mr. Joe Biden. And this, interestingly, is also at a time when Mr. Biden's approval rating is at an all-time low. So, I mean, at some point, the market will perhaps start factoring in Trump's potential return to power, right? But what do you think would be the impact for us, the markets in India?
See, I mean, if the potential of Trump coming back is there and that gets stronger, I think that would be positive for India because of the sort of a friendship which he has with our Prime Minister. So, and clearly, Trump is more favorable for India than Biden.
All right, and interim budget is on February 1. Any broader expectations? Because, I was looking at the FMCG numbers, at least the companies that have declared the numbers so far. The rural demand that continues to remain a pain point. Could,
Absolutely.
Could there be something that could come out in the budget that could help prop up the rural demand?
I don't think there'll be anything much in the budget as far as the FMCG space is concerned, but I think elections is something which I think will help drive the demand to a certain extent because, I mean, always we have seen, I mean, whenever there are elections, especially general elections, there is more cash in hands of the rural public. So I think that's what could drive that to a certain extent. And again, I mean, although expectations are building up for this budget from the point of view of defense spending and railways, but I really don't see anything much really being announced because end of the day, this is vote on account, and I think the main budget would be sometime in June, July.
All right, and the market has been hoping for a revision in the capital gain tax. Could that finally happen? Maybe not in the interim budget, but in the final budget later this year?
I mean, I doubt that happening because end of the day, I mean, the government also needs to garner funds, and especially in a year when most of the people have made bumper profits, it doesn't really matter much. I mean, if you are paying out some amount of tax for I mean for nation building. I mean, if the markets are not doing too well, possibly the government had some reason to tinker with them to at least get people to start investing into the Indian markets, but that's already happening. So I really don't see any tinkering happening this time.
All right, no tinkering as far as the budget is concerned. But sir, the markets, we have been talking about it, have been extremely choppy. So what should retail investors do? Is it better to just sit on the sideline, wait for dust to settle, or should you would you advise them to keep buying these dips?
No, I mean, see, if one is fully invested, I would suggest that one should take some profits home because profits which are in the books can actually vanish overnight. So take some profits home. I mean, be at least about 20-25% in cash. Clearly, do not invest fresh at this point of time because it doesn't really make sense. I mean, especially when you're looking at the valuations so expensive and the markets are getting choppy. So no fresh investment. Take some profits home and possibly wait on the sidelines if you don't want to do anything.
All right, wait on the sidelines. And any particular segment, the large cap, the small cap and the mid cap that is looking expensive at this point? Because I was reading some reports about mid caps. Now there the valuations are looking a little stretched at this point, isn't it?
It's not a little stretch, it's too stretched. I mean, if you're talking of mid cap and the small caps, I mean, there's no way I can value any of the stocks which have become multi-baggers in the recent past. It's very difficult to justify as to why one should be buying, other than for the reason that there's momentum, it can move up further. But that's more of trading. I mean, that cannot be a reason for a fundamental buy. So that's one of the reasons why I've been saying that one should, I mean, take some profits home. Because again, I cannot ask you to sell the full quantity in like whichever stock you're holding.
Right.
I mean, like even like a stock like IRFC. I mean, there is no way I can justify this. But at the same time, I can't tell you to sell 100% because I don't know where it'll be tomorrow. It can go to 200, it can go to 220 because there is momentum in that stock. But then if you ask me to justify it fundamentally, it's very difficult for me to justify a buy beyond 50 rupees. Today, it's nearly 4 times that.
But are we approaching the bubble territory, sir?
It is. It is. I don't know how many people will say that it's a bubble territory, but it is a bubble territory. And we should remember that bubble does not mean that it can burst tomorrow. Bubbles can become bigger. And that's what we have been seeing for the past couple of months now.
All right, that's a view coming in from Mr. Ambrish Balega. Sir, great insights from you as always. Always a pleasure speaking to you. Thank you for giving us time here on News9.
Thank you.
But with that, we have completely run out of time on this edition of Last Tick. Stay tuned with us as we'll be right back with Business Plus.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.